Hey everybody, oh, sorry about that. Dr. Joe's in the house, and let me see if I can get live on Instagram, and then we can get going. Okay, I think I'm live on Instagram as well. So, hey, welcome to another Wealth Wednesday. Looking forward to today's session. It's going to be a good one, I think. And we're going to talk about, really, hold on a second. Let's get this thing out here. Yep, good. Okay, yes. So today we've got another live session, and we're going to talk about the calm, the chaos. Invest smart, live well, and even the storm. So, what is all that about? And essentially, everyone's heard about the stuff going on in the Middle East, Iran, uncertainty in the markets, and it looks like it's pretty unpredictable right now. And I thought that given all the uncertainty going on, maybe it's good to talk about what to do. Whether you're a market renter, you invest in properties where the tenants are market renters or voucher holders. Generally when there's uncertainty in the market, it causes a lot of anguish and uncertainty with investors, and many people wondering, what should I do? What do I do? What direction should I go? And so I thought I'll have a sort of focus today's session, given the fact that we bombed, or the U.S. anyway, bombed the Iran last week, and the Israelis bombing Iran, and they think about Iran's think about closing the Straits of Hormuz and all this kind of stuff. It's just very unsettling, very unnerving. So anyway, war, economic volatility, political uncertainty, rising interest rates, and really the unpredictable tenant dynamics have left even the most seasoned residential real estate investors like you and I feeling a little bit off balance. What do we do? And for new investors, sort of the constant flux of market trends and financial instability can feel a little overwhelming. Everyone's asking the same question: what should I be doing right now to protect and or to grow my investments? What should I be doing right now? So what we're going to do today, this live stream, really is designed to unpack the strategies, lessons, and mindsets that successful investors use to weather the storms, and hopefully to come out stronger on the other side of all this turbulence. So rather than chase hot tips or attempt to time the market, what happens is that wise investors focus on the fundamentals, and that's things like creating systems, managing risk, and investing with a purpose. So rather than chase hot tips, and so on, the best portfolios aren't necessarily the biggest. No, you don't need to have a gazillion units or properties and so on to be able to survive. So it's not so much the biggest. I think that the best portfolios are the ones that are built to last. And that means designing your real estate business to withstand not only financial pressures, but also personal stresses. So when you build for resilience, you invest not only in properties, but also in peace of mind. And peace of mind is worth a lot. Sorry about that. Peace of mind is when you got calm, when you're not stressed over a lot of things. And, having a lousy tenant, a bad tenant, it just doesn't give you peace. A chaotic environment can amplify mistakes and really expose gaps in your operations or mindset. So investors who ignore these warning signs are often left playing defense. But those who stay calm, make data-informed decisions, and remain grounded in their core values, tend to come out ahead. So they turn uncertainty into an opportunity, or refine, refocus, and reposition their portfolios for long-term success. So today I'm going to talk about some of the good, the bad, the ugly of real estate investing, drawing from my real life stories and those of other investors who thrived through downturns and those who didn't. If you're ready to start reacting, start planning, then keep listening or keep watching. And the road ahead might be bumpy, but with the right tools and mindset, you can even thrive in chaos. So as you may know, I think I've been through about 6 or 7 market cycles over my 35 plus years experience. So I've been through these things before, and it's never the end of the world. We always seem to come out of it eventually. It's very turbulent during the time, but as the saying goes, it'll pass, and we go on. So today I'm gonna break the live stream into 6 parts, as usual, 6 sections, and halfway through, I'll have a little sort of summary. So if you have any questions, you want to pose me, please put them in the chat box, and I'll get to them about 15-20 minutes from now. And so anything to the real estate, deals that you're working on, any problems or situations that you're encountering, anything that's not going right, throw it out there, and I'll see what I can do to give you my take on it. And if you want more of a one-on-one meeting with me, where we can sort of do a deep dive into your situation, more deeper than we can today, then feel free to book a one-on-one with me. You go to my website, www.joeasimo.com, www.joeasimo.com, and you can book a session with me there. So again, the session today is called Calm the Chaos. Invest smart, live well, even in a storm. So the first one is mindset over market. Mindset over market. I suppose the question here is, how can the right mindset keep you profitable when the market turns against you? How can the right mindset, keep you profitable even when the market sort of seems to be going against you? Well, it's tempting to believe that success in real estate is all about data, deals, and dollar signs. It's all about, no, not really. It's not about data, deals, and dollar signs. But the most successful investors I found agree that mindset is really the ultimate differentiator. Because in turbulent times, it's not just the investor with the most capital who survives. It's really the ones with the most clarity, discipline, and patience. When chaos hits, your mindset is your greatest asset, or your biggest liability, I suppose. Fear-driven decisions often lead to short-sighted actions like selling too soon, over-leveraging, or neglecting your tenants. So investors who maintain a long-term outlook during the 2008 crash, for example, were able to buy low, hold tight, and reap the rewards years later. That's one thing I realized is that, when the market tanks, a lot of people get wiped out, but then it also creates a lot of opportunities, and especially if you hold on to your properties, which is what I do. And but the whole thing about holding is that you got to be able to survive, and that's where the Section 8 comes in. So resilient investors approach real estate with a calm, strategic mindset. And they plan for the storms during the calm seasons. When things are going well, all good things come to an end. So you kind of plan for that it's going to get turbulent. So you put systems in place, and you kind of avoid panic during downturns. Whereas other investors tend to don't plan for the downturn and the storms ahead, and when it does arrive, they just sort of blindsided and so on. So resilience doesn't mean denial, though. It means accepting reality without being paralyzed by it. The best investors remain optimistic but grounded. We understand that market fluctuations are temporary, and that the ability to respond with clarity and focus is really what ultimately will secure your long-term success. We see every challenge as a chance to strengthen our foundations, and also to develop this mindset. Investors need to train their thinking just like any other skill. So this means proactively managing stress, or under stress, staying informed, but not really being overwhelmed, but seeking perspective from experienced, investors and peers like yourself. So when you're thinking calm, when your thinking is calm and strategic, your investing will also be the same way. As I said before, the reason why I've been able to survive through so many cycles is just that I've decided to focus on Section 8. Why? Because for the most part, it's a very reliable, stable income stream. When the economy tanks, then tenants can, if they lose their jobs, in fact, I had a couple of tenants, in fact, over the last couple of months have lost their jobs. And since their income went down, they went to the housing authority and their rents went down. Okay, so the housing authority's portion went up because the tenant's income went down. And so my net is still the same. So it tends to be a lot more resilient during economic cycles. And therefore, it's a more stable income stream. And that's what's been able to help me during multiple life cycles. So what are some of the action items? Surround yourself with calm, experienced investors if you can. Develop a written chaos plan that outlines how you'll react in market downturns. So start planning now, rather than just sort of winging it when things don't go the same way that you want to go. So number two, number one is all that mindset. Number two is invest with intent. Invest with intent. What do I mean by that? I'm talking about, are you building wealth or are you just buying properties? There's a big difference. Are you building wealth or are you just buying stuff, buying properties? Well, the reality is that too many investors confuse activity with progress. They're doing stuff, but not necessarily progressing. Just because you're acquiring properties doesn't necessarily mean that you're building wealth or you're stable. Intentional investing means, sort of aligning your financial goals with your personal values and designing a portfolio that supports the life that you want, not just the balance sheet that you chase, the life that you want. And my take is that if you're a long-term landlord, you cannot have stability, peace of mind without having good tenants. It's just very difficult, especially tenants that don't pay you, tenants that are destroying your home, tenants that are just nonstop drama, and you always have that event, that sort of revolving door of people coming in, staying a year or a few months, and then leaving. And then you got to go through the whole thing again. So it's not just about buying stuff. You got to buy stuff. You got to buy it strategically. So I've seen during my times investors who buy multiple properties very quickly, only to burn out from poor cash flow, bad tenants, or management headaches. After they've acquired their portfolio, and the net result is that they lose their portfolio, especially when the market turns on them. So on the other hand, successful investors like you and I, hopefully, build with the end in mind. We acquire with the end in mind. We know the why we're doing this, and we use that as a guide to purchase, rehab, and our tenant leasing decision. A well-structured real estate portfolio, really should free you and I, not to trap you and I. Purposeful investors ask deep questions. Will this property move me closer to time and financial freedom? Does it allow me to delegate my operations? Will it cash flow under stress? We see investing not as a race, but really as a vehicle, as a way to create an aligned security, create lifestyle that's aligned with our ultimate goals. We also factor in family, legacy, and also flexibility, not just yield. So intentional investing also includes knowing when to walk away. Not every deal is a good one. And chasing the wrong property is not always a good thing, because that can derail your strategy. So smart investors develop discipline, not only in what they say yes to, but also in what they say no to also. So what are some of the action items here in terms of investing with intent? Write out your 5-year personal investment goals. Evaluate each property for alignment with your long-term goals. And just say no to deals that don't match your strategy, even if they may appear to be tempting. Okay, so let's keep on to number three. Number three is sort of design systems, not stress. Design systems, not stress. And the question here is, how do smart systems reduce chaos and create peace of mind? How do smart systems, the system that you're going to put in place, how does that create, how does that reduce chaos, I suppose, and create peace of mind? Well, you can ask any seasoned investor, what changed everything? And most will point to systems. It's for me the same thing. I was just buying stuff at one time, and I realized that I wanted to fast track my portfolio. I was getting tired of my 9-to-5 job. I was tired of traveling, and I wanted to start building my portfolio. But I couldn't do that unless I have certain things in place. And therefore, I took the time to develop processes. I took the time to leverage technology. I took the time to put together a team. I took the time to get my financing in place, my contractors in place, my real estate agents and bird dogs in place. I took the time to put all that stuff in. And so when I'm talking about systems, that's what I'm referring to. Systems tend to reduce the emotional, mental, and operational strain of real estate investing, from things like tenant screening to rent collection to maintenance response. Systems create predictability in a very unpredictable world. So without systems, even a small portfolio can feel like a full-time job. With systems, even large portfolios can run with minimal hands-on effort. Property management, accounting, inspection, and communications should all follow clear, repeatable processes. Systems allow things to be sort of repeatable. This allows you to focus on strategy, not firefighting. Systems also allow you to scale. Once you fine-tune a process, you can replicate it across multiple properties or multiple markets. So this sort of kind of maintains consistency in the tenant experience and also the financial performance of your portfolio, even when your team or your property volume increases. Smart investors document everything. They know step 1, step 2, step 3. If this happens, you do that. If that happens, you do this. And from onboard to tenant to how to process a maintenance request. Most importantly, systems protect your time and your energy. What I've learned is that they reduce your fatigue. You kind of avoid making unnecessary or costly mistakes. And it kind of gives you space to work on your business, not always just in it. If you want peace of mind in real estate, systems are really your foundations. So what are some of the action items here? Create a written onboarding and maintenance response checklist. That's one thing you can do. Set up automatic rent collections and reminder systems, and also hire a virtual assistant or property manager for recurring tasks. I have a virtual assistant. I manage my own properties, but I have a virtual assistant. In fact, she's in Ghana, and she's really the backbone behind the scenes, getting stuff done and staying, keeping me organized and so forth. So, okay, we're kind of halfway through. And so if you've got some questions, please put them in the chat box. We'll get to them in about 10 minutes from now. Anything to do with real estate, put them in there. Any deals that you're working on, any situations you're facing, any tenant issues, challenges, financing, construction, contractors, whatever it is, put a question in there if you have one. And I'd be more than happy to give my shot and trying to answer them. But if you want to go in a deeper dive, you can also do schedule a one-on-one with me. You can do that at my website, www.joeasamoah.com, www.joeasamoah.com, and you can go to the icon Ask Dr. Joe. Ask Dr. Joe. Okay, moving right along to number 4 or 6, so kind of halfway through now. Stay liquid, stay safe. Stay liquid, stay safe. You got to be liquid to a certain extent. So the question is, can your portfolio survive a cash crunch? Can your portfolio survive a cash crunch? Well, one of the biggest killers of investor momentum is really the lack of liquidity. Emergencies don't wait until you're ready. and neither do opportunities. Life happens. In fact, like, I'll give you an example. Like this last week, we had a pretty bad storm here in the Washington, D.C. area. And one of my houses, the roof blew off. Can you believe that? It blew off. And my tenant called me and said, hey, she got a call from the neighbors that part of my roof or part of her roof is in their house. And that came from nowhere. And obviously, she called me. She was pretty frantic. And, essentially just said, what are you going to do? Well, I wasn't expecting the roof to go off. And fortunately, I have some reserves set aside for these kind of rainy day things. It wasn't big enough whereby I call the insurance company. I don't usually call the insurance company unless it's really, really bad. And this is something which I thought I could handle. So I didn't make a claim. And but I had reserves. And those reserves allowed me to do that. If I didn't have reserves, the roof has to get fixed. And, it could be very, very challenging. So, one of the biggest killers of investor momentum is really a lack of liquidity. Emergencies don't, as I said before, don't just wait until you're ready, and neither do opportunities. Investors who keep reserves, we tend to thrive more in downturns than those who don't, who often spiral into debt, delayed repairs or deferred maintenance, or even forced sale. They have to sell their properties because they just don't have the liquidity to continue. So successful investors plan for vacancies, plan for repairs, and plan for slow payments. We build cash cushions and credit buffers, maybe access to lines of credit, HELOCs, and things like that. We build all that stuff into our model. And we also refinance strategically, not aggressively. Liquidity kind of gives you the confidence to ride out storms, make smart moves, and sleep soundly at night. Liquidity is also provides leverage when used wisely. Used wisely. I have several home equity lines of credit, and they're just there. They're out there. And in the event that I need money, I can tap into that quickly. If I don't need it, I don't use it. It's just sitting there. So liquidity, when used wisely, can allow you to do many things. Having available funds during a downturn means you can seize discounted deals, help distressed sellers, or reposition your portfolio at a time when others are struggling. So in essence, liquidity it can be used as a growth tool, not just a safety net. So cash is not just king, it's your safety net and sometimes your competitive advantage. So what are those action items here? Maintain 3 to 6 months of expense per property in reserves if you can. Monitor and manage your debt to income and loan to value ratios, and establish a HELOC, home equity lines of credit, or business line of credit for emergencies. Moving on to number 5 of 6, and that one is tenant-centered investing. Tenant-centered investing, and the question is, what happens when you treat tenants like long-term tenants? What happens when you treat tenants like long-term tenants? What happens when you treat tenants like real people and not just rent? Well, in uncertain times, tenant satisfaction really becomes your most stable metric. Tenants who feel heard, safe, and respected are more likely to pay on time, stay longer, and take care of your property. And landlords who neglect this often face turnovers, repairs, and reputation damage. The most successful landlords today are really the ones which are customer focused. And that's what I've really oriented my business to, is to have more tenant focus, more geared towards tenant satisfaction, making sure my tenants are happy, because if they're happy, they hopefully will tend to stay. So tenant focused strategy anticipates needs, responds promptly when situations occur, and treat tenants like partners. This doesn't mean tolerating bad behavior, but it does mean raising your standards for tenant care. Tenant relationships also can be used as an early warning signs. If tenants are not happy, it gives you time to fix it before they give you a 30-day notice saying that they're leaving. So, a tenant who feels connected is more likely to communicate issues early, allowing you to address small problems before they become expensive ones. Long-term tenants also reduce turnover costs and vacancy losses, boosting your bottom line over time. So in a market where affordability is tightening, which it is now, and renters are more selective, which they are, your ability to retain great tenants is more valuable than ever. Customer service isn't optional. It's really core investing skills. So what are some of the action items here? Send quarterly tenant satisfaction surveys to kind of get a pulse of your tenants and get the feedback. Offer small rewards for lease renewals, and reward them for maintaining your properties. And then finally, number 6, purpose-driven portfolios. Purpose-driven portfolios. The question here is, how can real estate invest and help you live, not just earn, better? How can you live better with real estate? Well, it's purpose-driven portfolio. The real estate investors burnout is real. You just go to any landlord-tenant court, speak to a lot of these landlords at RIA meetings. They just burnt out and they're just tired. They want out. And that numbers are increasing. Many investors lose sight of why they started, trading time freedom for endless hustle. The solution: reconnect your portfolio to a larger purpose. And, my thing is, I like to make money, obviously, but I also like to help my tenants and do good. That's my larger purpose. It's just very, very nice. In fact, I met one of my tenants, today's Wednesday, so it's Monday. No, it was yesterday. Yesterday. I went to one of the tenants' houses. We decided to put solar on our house, and it's an all-electric house. There's a program in Washington, D.C., where you get free solar. So we went over there, did the site survey, and I sat down with my tenant, just kind of making sure she's happy, making sure that everything's okay. I mean, she loves her home. She's been there 5 years, and she has zero intentions of leaving. So I just enjoy every now and then just meet up with my tenants, just talking to them, making sure everything's okay, checking in with them, and so forth. That's really it's very rewarding for me anyway, knowing that I'm doing something to help other people. So investors who build for impact, family legacy, or community transformation stick with it longer, and I think enjoy it more. Purpose-driven portfolios also guide decision making. When you know why, you know what to build and when to pause, and also when to walk away. When challenges arise, you're more likely to stay committed if your investments are tied to something more meaningful. It's not just about making money. This could be creating affordable housing, helping underserved families, or just building generational wealth. Investors with a sense of mission tend to be more resilient, especially when external chaos increases. So they aren't really driven by FOMO or fear of missing out or market noise. They're anchored in clarity. So that, my friend, is pretty much it for today. And let me just kind of summarize all this in conclusion. The question is, what separates those who survive from those who thrive in real estate today? Uncertainty isn't going away. Markets will rise and fall. Policies will shift. Emergencies will come. But how you prepare and respond, that's where the power lies. It's really what's going to differentiate you from the rest. By mastering your mindset, designing intentional strategies, and building with purpose, you can calm the chaos and come out stronger on the other side. The most successful investors aren't just great at math. They're great at managing emotions, systems, and also expectations. They don't react to every news cycle or hot take. They stay focused, resilient, and values driven. That's what builds wealth that lasts and a life that feels rich in more ways than one. So investing isn't about surviving the next downturn. It's about thriving through all of them. Whether you're building your first portfolio or scaling to your 10th property, every step should align with the life and legacy that you want to create. So if you're ready to build not just a portfolio, but a peaceful and purposeful business, this is your roadmap. Look into those 6 items which I've covered today. And if you missed this live stream or you came in late, please catch the replay. Take notes. Your future self, I think, will thank you for it. My friends, that is it for today's education part. As I said before, if you got some questions, put them in the chat box. I'll get to them in a couple of minutes. Anything to do with real estate, put them in there. And if you want to shoot me an email, you can reach me at joe@joeasamoah.com, joe@joeasamoah.com. And if you want to book a one-on-one with me, where we can do a deep dive, I had a couple this week. Good session yesterday with Joel and William. And we talked about, investing in a potential property that they've seen both in Washington and also in Virginia. And I also talked to them about my JV Wealth Builders program as well. So, book a one-on-one. Just go to my website, www.joeasamoah.com. And more than happy to go into a deep dive with you, any situation, any questions you may have. So with that said, let's get down to Q&A. And see what you got here. So we have greetings from Phoenix. Hi, Dao2. Hope you're doing well where you are. Wow, sorry to hear your roof blew off. Yeah, it sure did. I can't imagine. Hopefully, I never have to imagine. No, it's not good. But, these things happen. You can't cry about it. You have to deal with it. And so I got my contractors together and went over there, checked it out. I didn't go there. They went there. I trust these contractors. And we put together a game plan. And it should be finished tomorrow. So, that's what happens when you have reserves. I was able to ride that one. But if I didn't have any reserves, I would be panicking. Hi, Dr. Joe. For potential voucher holders who are on the wait list, do they have to apply for the wait list year after year? That's a good question. I don't think so. I think once you're on the wait list, you're on the wait list. At least that's what it is in the areas which I've been accustomed to, which is the Washington, D.C. area. You usually, register or sign up. And if you're qualified, it's usually income and family size based, then I don't think you need to reply every year. I think it's usually first come, first served. So if you're later, then, you could be back of the line. It could take years or months to get, to get a voucher. Getting a voucher is almost like hitting the jackpot. It's hard. And many people are on, sort of wait list for many, many years. Okay, let's have a look. Dow 2. I have a new voucher holders moving in on July the 1st into one of my properties. Okay. She wants to move her big furniture in Saturday, 6/29. She says she won't have help to move in 7/1. Okay. Let's have a look. Let's see what you have to say here. It's the first time I ever had this request, but I said yes, she can move her big furniture on Sunday. I have let's have a think you continue. I have a potential voucher holders coming in to view a different property. Okay, so let's have a look. Let's take your questions one by one. So you got a new voucher holder is moving into your property July the 1st, and she wants to move in her stuff a couple of days beforehand on the Sunday, the 29th of June. She says she won't have help move in on 7/1. I would strongly suggest you do not do this, Dao2. Do not allow someone to move into your property without the HAP contract being signed and the housing authority officially allowing you or her to move in. I've had this before where tenants want to move in early for whatever reason. And I haven't had any issues, but I've heard stories whereby people allow them to come in and something happens whereby the paperwork is not finished. And now you got a tenant who's moved into your property and with some stuff, and the paperwork from the housing authority is not complete. So now you are in big problem because you're not getting paid until the paperwork is finished, and so on. Or a tenant may move in to your property and for whatever reason doesn't get through the entire process for the vouchers. So again, these are worst case scenarios. It's unlikely to happen in your scenario, Dao, I don't think. But I never do that. You can move in once the paperwork is done, and you can move in once the housing authority says you can move in that day, not a day before, because they will not be paying you from June the 29th. They'll be paying you from July the 1st. So it's a risk on your part. It's up to you if you want to take on that risk. I'm in a jurisdiction in the Washington, D.C. area where it's very pro tenant. So it's easy to get someone in your house, but it's a lot more difficult to get them out. So I'm just siding on the, on caution on a situation like this. So that's the reason why I just don't do it at all. If you're in a pro landlord state, maybe you have some bit more wiggle room that you can work with if you have to get them out. But in this area, if once they're in, once you give them the keys, once they sign the lease, it's not possible. The other thing I would do would be maybe is that you don't sign the lease, you don't give them a key on the 29th. You can allow them to put their stuff in, but I wouldn't give them a key, and I would not have the lease start until the housing authority date that they agreed to. That's maybe a compromise, but I just go by caution. So let's have a look what you say. It's the first time I had this request, but I said yes. You can move her big furniture in on Sunday. Yeah, I'll leave it up to you, but I'm not a great fan of that one at all. Or maybe I'm just too cautious. I've seen too many problems, and so I verge on. I don't need problems. I want a problem-free existence. Okay, and they're on the wait list because funding has run out. Okay, this is Ty's question. Has run out of the local housing authority, or the number of bedrooms they need aren't available. Okay, so original question is, hi, Dr. Joe. For potential voucher holders, do they have to apply for the wait list every year? And you continue, and are they on the wait list because funding has run out of the local authority, or the number of bedrooms? They're on the usually on the wait list because there are more people that need housing than there are funds available or vouchers available. So if, let's say, they got $1,000 to, in the budget, and 10 people want the voucher, there's only $1,000 there. So 9 people are going to have to wait until more money comes available. So it's usually because there's more people that want the voucher or want housing than there are funds available. That's the reason why they have to stay on the wait list. And the wait lists tend to sometimes, when somebody quote unquote graduates from the program, either they're kicked out or they are their income goes above the amounts, or whatever reason, if they fail to qualify for the program, then they graduate from the program, and that then frees up a slot generally for another person to get off the wait list and to get a voucher. I know I spoke to one of my tenants. She was kind of creative. I know that there are some states whereby the wait list is very, very, very short. And I know there's like a I don't know what it is, but there's a whole nother world out there where people are just moving from one place, which is a high wait list, to another area where there's a low wait list. They go there, get a voucher quickly, and they stay there for a year if it's a federal voucher, and then they transfer over to somewhere. I mean, I've heard that before. One of my tenants, that's how she got her voucher. She went to some place with a low wait list and then stayed there for a while and then came back to the DC area. So that's some creative strategy that some people use. Again, I don't want to attest to that. I just heard it. I don't know too much about that. But that could be something you may want to share with your tenant. It's the first time I've ever had this request. Okay, so I think I've gone through that one. Dow 2, I have a potential voucher holders coming to view a different property that I own on Monday, 6:30. Okay. Hopefully this potential tenant shows up on Monday. Okay. So yeah, I don't know what's going on in Phoenix, how strong the market is over there. I know in the DC area, there's a real housing crisis. So especially in the, I tend to deal with 4, 5, 6 bedroom houses. And there's just a dearth, a shortage of those kind of properties versus the number of people that are looking for 4, 5, and 6 bedroom houses. Oppositely, how does this is from Ty. How does the housing authority allow voucher holders to remain on the program for years and years? Said in another way, what would cause a voucher holder to be dropped from the program? Yeah, I think I said that before. Once you got a voucher, pretty much as long as you qualify, which is usually income-based or family size-based, you can keep that voucher for forever. My longest tenant is 28 years. And, I mean, they're pretty creative in terms of figuring out how to stay on the program. But yeah, they only come off or graduate from the program if they either get kicked off the program, i.e. they violate a policy rule, or their income increases to a point whereby they no longer qualify, or the household size has gone down to the point whereby they just don't qualify anymore. So it's not very common that people get dropped from the program because it's really hitting the jackpot. And, it's an opportunity to find quality housing in quality areas, which a lot of tenants are having difficulty with. So that's the reason why people stay on. I know that the federal government, the Trump administration, is trying to change things around whereby they're going to reduce the length of time someone can stay in that in the program. So we'll see where that goes. I know I've heard that before, but nothing really materializes. But we'll see. I have an issue finding a reliable cleaning person. I normally end up hiring multiple cleaning people to clean up after the previous cleaning person. Clean up after the previous cleaning person doesn't do a good job. Then I end up helping them clean. Oh my God. Okay. So why do you have difficulty finding reliable cleaning people? I would suggest that you go to a local RIA meeting. You speak to other investors and find out who they're using. You may call some property management companies or some short-term rental landlords and find out who they use and get some referrals that way. It's hard to put together a team. I mean, I have a cleaner. She's really good. My contractors, they have somebody there who cleans after they finish their work. Finding good people is just hard. So I would start off with trying to get referrals from people, especially other landlords or other investors, real estate investors who may share with you who they use. Another option is to go to these forums, real estate forums, and post a question. Hey, I'm in the Phoenix area. I'm looking for good cleaners who are reliable, honest, trustworthy, and so forth. And you may get some referrals that way. I know Big Pockets has a pretty large forum, so you may want to check them out. But yeah, it's all about building a team, which is usually about referrals and leveraging from other people. Okay. Helping them clean. I don't know why you're helping them clean. I used to do that when I first started, but I don't do that anymore. I don't do any of that stuff. And I don't miss it as well. But I know sometimes you got to do what you got to do. I get it. Hi, Dr. Joe. Do you use any specific tools or apps to alert you to properties that fit within your buy box as potential investments? Or do you primarily use Scouts, Bird Dogs, and your other contacts? Yeah, most of my houses that I've purchased purchased them through the MLS, believe it or not. And these are publicly available properties. And that's where the vast majority of my houses have been purchased. Now, every now and then I do work with wholesalers who come across deals that meet my criteria. So what does that mean? It means that I have to develop the criteria of properties that I'm interested in. So, in terms of the location, in terms of the condition, in terms of the price point, all those things, come into play in determining my quote unquote buy box, or I call it criteria. And once I've developed that criteria, like my houses, they always have to have basements, and they got to be a minimum square footage size because I need to make 4, 5, and 6 bedrooms. And so with that criteria, then I can share that with realtors, real estate agents, wholesalers, bird dogs. And so hopefully they only bring me stuff that meets my criteria, and they're not bringing me stuff that's wasting my time and wasting their time. So, so I use MLS and I use real estate agents and wholesalers. I don't really use any tools or apps. I'm not a bird dog. I'm not a wholesaler. I'd rather work with wholesalers and bird dogs and realtors as opposed to trying to be one. I just don't have the time or the desire to play that role. So I leverage other people, and then when I buy something from them, then I reward them by compensate them, for bringing the deal to me. So I don't use any tools or apps to alert me, but I know there are some out there. You may have to do some research here to find out which one makes the most sense in your area, wherever you are. But yeah, I use real estate agents, wholesalers, and bird dogs. But most of my properties I bought have been through real estate agents and properties that have been listed on the MLS. Okay. Again, if you got any questions, put them in the chat box. Otherwise, I'm going to wrap it up because it's about 7:50 now, and had a good session according to Reddy. Thank you, Dr. Joe, as always. Great session. You're welcome. So I think that's about it, really. So if you've got any questions, feel free to put them in there here. Otherwise, I'm going to wrap it up. If you want to do a one-on-one with me, by all means, you can go to my website, www.joeasimo.com. That's www.joeasimo.com. If you want to shoot me an email, shoot me an email at joe@joeasimo.com, joe@joeasimo.com. Otherwise, I'll be here next Wednesday, 7 p.m. Eastern Time for another Wealth Wednesday. Looking forward to that. But the market is changing. There's a lot of uncertainty going on. But if you've got your act together, this is a good time to buy. It really is. The best time to buy is when there's uncertainty, when there's people are kind of leery and not buying. And right now, the days on markets are increasing, which means that there are more sellers than there are buyers. There are more sellers than there are buyers. So in other words, buyers are getting the upper hand. So it may be possible. Obviously, it depends on the location that you're in, whereby there's less competition, and therefore sellers are now becoming more reasonable in terms of what they're looking for, in terms of their price points and things like that. And free solar in DC. Yes, I got. They need to make that program nationwide. I'll get that in a primary residence if it's free. Electric bills in Phoenix can be high because of the high temperature. Yeah, we have. There's this program here in DC. It's free solar. So yeah, I got that for my tenant. Well, we started the process, and we did the site survey yesterday. So hopefully about another 2 months, as she said, 2 or 3 months, the person said, we should be good to go. And it's free. It didn't cost me anything. And in fact, they have a warranty whereby if there's anything goes wrong with the roof, they will fix it. Yeah, so the tenant's happy because obviously her electric bill is going to go down significantly. And I'm happy because I've got a tenant now who, her costs are going down. So she's more likely to stay. And so I'm likely to reduce my turnover costs. So it's a win-win. Thank you always. Appreciate your insight and guidance. You're welcome, Katie. Again, my friends, I'm going to wrap it up for today, and I'll see you guys next Wednesday, 7 p.m. Eastern time. Take care. Bye for now.